Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Sentiments remained weak over the action-packed last week. Global equities remained under pressure as the Fed's higher for longer tightening policy stance reignited concerns over an economic slowdown, driving USD and bond yields higher. In its latest meeting, the US Fed left policy rates unchanged. The updated dot plot, or the FOMC's best estimate of where it sees the path of interest rates, showed the median dot for 2023 at 5.6%, which implies perhaps one more rate hike is still on the table. It also showed that Fed's pulled back its estimate of rate cuts in 2024 from 100 basis points of cuts to just 50 basis points, which will be followed by 120 basis points cut in 2025, another 100 basis points in 2026, bringing the Fed funds rate to under 3%. In China, policymakers further eased measures in the property markets, including relaxing home purchasing rules and easing foreign capital transfers. Central banks of Indonesia, Philippines, and Taiwan kept policy rates unchanged at their September meeting. Market reaction to the developments were quite sharp. The S&P 500 and Nasdaq Composite fell below the 100-day moving average, with the China's bellwether index CSI 300 fell to a 10-month low. For the week, the MSCI World, MSCI Asia ex Japan, and MSCI China indices fell around 0.6% to 2.7%. In the US, the S&P 500 index, Dow Jones Industrial Average, and Nasdaq Composite Index fell around 2.9 to 3.6%. Back home, Indian equities snapped a 3-week winning streak. BSE Sensex recorded its worst weekly decline in 15 months, down 2.7% amid weak global sentiments, profit booking, and continued foreign investor outflows. Broader markets outperformed large-cap peers, with the Nifty Mid-Cap Index down 1.7% and Nifty Small-Cap Index down 2.5%. Among sectors, all sectors ended the week in green except utilities, while banks and realty led the losses with cuts of over 3.5% for the week. The Indian fixed income market had a volatile week. Indian government bond yields fell during the start of the week on expectations of Indian bonds' inclusion in overseas bond index. On Friday, bond yields fell sharply after JP Morgan announced a decision to include Indian bonds in its JP Morgan Emerging Market Bond Index and its relative derivative indices. However, profit booking by traders following the initial euphoria led to bonds reversing the entire gains for the day. For the week, the 10-year Indian government bond yield fell 1 basis points to 7.19%, while the 3-year and 5-year Indian government bond yields rose 1 basis points and 2 basis points respectively. The INR appreciated against the USD as the news of India's bond inclusion on global bond index balanced the impact of strengthening US dollar, higher US bond yields, and foreign investor outflows. For the week, the INR rose 0.3% against the US dollar to close at 82.94. Brent crude oil remained range-bound over the week, closing at $94 per barrel, as positioning remained cautious ahead of major central bank policy actions. That's it in this edition of the podcast, and thank you as always for listening. If you enjoyed the podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.